Markets begin the week facing an uncomfortable question. Is the Sell America trade about to make one almighty comeback? As we saw over the weekend, Donald Trump has threatened fresh tariffs on 8 European nations unless Greenland is sold to the United States. It's an extraordinary demand, but for markets, this isn't about geopolitics. It's about policy uncertainty, leverage, and the return of tariffs as a strategic weapon. That combination matters because we've seen what it can do to markets before. The last time a Sell America trade took hold was in early April last year, just after the Liberation Day tariff announcement from Donald Trump. The dollar weakened, Treasuries sold off, and US equities underperformed global peers. Now, of course, investors weren't reacting to data. They were reacting to unpredictability, creating something of a buyer's strike in US assets. That move only stabilized when Donald Trump walked back the tariff threat, delaying their implementation while negotiations took place. As we saw at the time, volatility eased, confidence returned, and US assets bounced back extremely hard. That history likely explains why markets are wary about getting too bearish right now following this latest threat. The initial tariff rate is only 10%, and it doesn't kick in until February, and it's landed at the start of a long weekend in the United States. With the World Economic Forum in Davos kicking off, traders are conditioned to expect talks, delays, and yet another backflip. That's the logic behind the so-called taco trade. But this episode may be different. The tariff structure is tiered, rising from 10% to 25%, with a high rate not kicking in until the start of June. That creates a much longer window for pressure rather than compromise. And this isn't a standard trade dispute either. It involves control of a strategic, mineral-rich landmass fitting more with the logic of the Monroe Doctrine than conventional tariff brinkmanship. That raises the risk that this drags on, and that's where markets become vulnerable, particularly interest rate markets. Long-dated treasuries are already sitting on shaky ground. 10-year futures are testing the key 200-day moving average after pushing to levels not seen since early September during Asian trade on Monday. If a Sell America trade does re-emerge, the long end is where stress is likely to show up first. Higher long-dated yields would add to pressure on other rate-sensitive markets. In other words, if they sell off, it's unlikely to stay contained. We'll find out quickly whether this is another short-lived scare or something far more persistent. But if both sides dig in and Europe responds forcefully using its anti-coercion instrument, complacency could be replaced quickly by chaos.